Forex bros, crypto pumps, and trading gurus, the scam targeting young men, and why the math literally cannot work. This is Tyler. He's 22 years old. He works at a coffee shop. He has $2,400 to his name, savings from his graduation money, his last few paychecks, and money his grandmother gave him for his birthday. Tonight at 1 a.m., Tyler is going to lose most of it. In 11 seconds, Tyler's $2,400 is gone. Not lost gradually, liquidated, disappeared. The trading platform sends him a notification congratulating him on his trade and inviting him to deposit more funds to keep trading. Tyler is going to do this 2 more times over the next 6 months. By the time he finally stops, he'll be down about $8,000, money he doesn't have and is now borrowing on a credit card. He will tell himself he just hasn't cracked the system yet. He will then pay $497 for an online course taught by the Lamborghini guy from YouTube. That course will also lose him money. Tyler is not stupid. He is not lazy. He is responding rationally to a multi-billion-dollar marketing machine designed specifically to make him believe he's about to be rich. Forex bros, crypto pumps, and trading gurus, the scam targeting young men, and why the math literally cannot work. By the end of this video, you'll know exactly how this industry works, exactly who actually profits from it, why the math is mathematically rigged against you, and how to spot a trading guru pitch in the first 15 seconds, so you can opt out before your wallet does. Why young men get targeted. Let's start by understanding why Tyler's algorithm is full of this stuff in the first place. Because if you're a young man on YouTube, Instagram, TikTok, or X, your feed almost certainly contains some version of this content, whether you've sought it out or not. Just like MLMs target women, trading gurus, and financial freedom coaches target young men. The data on this is consistent. The audience for Forex courses, crypto trading academies, options trading mentorships, and day trading boot camps is overwhelmingly young, overwhelmingly male, and overwhelmingly between 18 and 30. And just like MLMs, the pitch is engineered for a very specific emotional moment. It targets young men who are stuck in low-paying jobs, anxious about their career trajectory, watching peers seem to get rich on social media, dealing with parental pressure to be successful, attracted to ideas of independence and self-sovereignty, and increasingly watching their actual chances of buying a house or matching their parents' standard of living quietly disappear. Forex and crypto trading aren't being sold to young men because young men are uniquely greedy. They're being sold because young men have legitimate economic anxiety. And someone figured out how to monetize the dream of escaping it. The pitch is rarely come learn a difficult skill that takes years to master, has a high failure rate, and might not work. The pitch is almost always, I made $40,000 last month with this one trick. Here's the system. I'm letting 10 people into my Discord this week. DM me wealth. Notice the structure, speed, scarcity, secret knowledge, and a low effort path to enormous wealth. Every single element of that pitch is engineered to bypass the part of your brain that does math and activate the part of your brain that imagines yourself with a Lamborghini. The math, the gurus will never show you. Now we get to the math. The trading gurus will never put on a thumbnail. There are 3 groups involved in retail trading. That means individual people trading from their bedrooms on apps like Robinhood, MetaTrader, Coinbase, or Binance. Let's look at each. Group 1, the brokers and the exchanges. These are the platforms, the apps and exchanges where the trades happen. They make money on every trade you place. Spreads, fees, slippage, sometimes selling your order data to high-frequency traders. They literally cannot lose. Every trade you make, they win, whether you win or lose. In 2024, the largest retail-focused brokers and crypto exchanges in the world reported billions of dollars in revenue, primarily from individual retail traders. They are not on your side, they are on their own side, and their entire business model depends on you placing more trades, not fewer. Group 2, the gurus and the course sellers. These are the people in the rented Lamborghini videos. They sell you courses, mentorships, signals, Discord access, and online communities. Their income does not come from trading. Their income comes from selling you the dream that you can become like them. If you ever doubt this, ask one specific question. If your system reliably makes $40,000 a week, why are you selling a $497 course instead of just using the system to make more money? The honest answer, which they will never give, is that the system doesn't work. The course does. The actual product they're selling is your monthly recurring payment. If a system reliably made $40,000 a week, no person on earth would teach it for $497. They would use it. The course is the income. The trading is the marketing material. Group 3, the actual retail traders, Tyler and you. And then there's Tyler, and maybe you, and millions of other young people sitting in bedrooms with trading apps open at 1 a.m. This is where the math gets genuinely brutal, because we have decades of academic and regulatory research on exactly how retail traders perform. The findings are consistent, large sample, and from sources with no incentive to mislead. Multiple long-term studies of retail forex and day trading accounts in the US, the EU, Brazil, and other markets have found the same pattern. Across multiple jurisdictions and studies, the overwhelming majority of active retail day traders lose money over a 1 to 2 year horizon. Some studies put the loss rate at 70%. Others put it as high as 90% or more. The handful who do make money tend to be people who spent years learning, manage risk obsessively, treat it as a profession, not a hobby, and even then often earn less than they would in a regular job adjusted for their hours. This is not a controversial finding. The European Securities and Markets Authority, the EU's equivalent of the SEC, now legally requires every Forex broker advertising to retail customers to display a warning that a high percentage of their accounts lose money. The brokers themselves report the data. Most CFD and Forex brokers in regulated markets have to publicly disclose that somewhere between 70% and 85% plus of retail customer accounts lose money on their platform. If casinos had to publish their odds, gambling would feel honest. Brokers in regulated markets are required to publish their odds. The brokers themselves are telling you the truth. In fine print, mandated by regulators, 70 to 85% of retail accounts lose money. The math is not hidden. It is just ignored. Now think about that. The very platforms where these trades happen are required to publicly admit that most of their customers lose, not haven't gotten lucky yet, not are still learning, lose. Walk away with less than they started. And these are the disclosures the brokers themselves are forced to write. Why leverage is the extinction level event. Now, let's talk about the specific reason Tyler lost everything in 11 seconds. Because it wasn't just a bad bet, it was a structurally engineered wipeout. The word for that is leverage. Leverage is a financial mechanism that lets you control a much larger position than the money you actually deposit. If a broker offers 50 times leverage on Tyler's $2,400, Tyler can now control a position worth $120,000. If the asset goes up 1%, he doesn't make 1% of $2,400. He makes 1% of $120,000, which is $1,200, a 50% return on his money overnight. This is what the gurus show you. The upside, the screenshots, The I turned $500 into $20,000 in a weekend tweets, "Here's what they don't show you. The downside is mathematically symmetrical. If the asset drops 1%, Tyler loses 1% of $120,000, which is $1,200, or half his entire deposit. If it drops 2%, his entire $2,400 is gone. That's called liquidation. The position is closed automatically. The money is forfeited to the broker. There is no second chance. Cryptocurrencies, especially smaller ones, routinely move 5%, 10%, sometimes 20% in a single day. At 50 times leverage, even an ordinary daily fluctuation in the market is enough to liquidate Tyler's entire position. It is not a question of if the position liquidates. It is a question of how soon. High leverage doesn't help retail traders win. It is the mechanism that guarantees they eventually lose everything, usually faster than anyone expects. This is why offshore and lightly regulated trading platforms aggressively offer high leverage 50 times, 100 times, sometimes 500 times. The higher the leverage, the more trades, the more fees, the more liquidations, the more revenue for the platform. The math works for the broker even better when their customers blow up faster. In regulated markets, the US, the EU, the UK, retail Forex leverage is legally capped at much lower levels precisely because regulators looked at the data and concluded that high leverage was destroying retail customers. The platforms Tyler is using are often deliberately based in jurisdictions where these caps don't apply. That should tell you everything. Spotting a trading guru pitch in 15 seconds. Here are the warning signs that you're being pitched a trading scam. Individually, any one is a flag. Together, they almost guarantee it. They show their lifestyle before they show their strategy. Lamborghinis, penthouses, designer watches, stacks of cash. If the visuals show wealth before the content shows substance, the wealth is almost certainly the marketing, not the result. They use specific dollar figures with no proof. I made $43,891 last week. Real traders are extremely cautious about specific income claims because the SEC and similar regulators around the world legally restrict making unverified income claims. Genuine traders speak in percentages and risk ratios. Gurus speak in screenshots. They offer signals. Paid alerts telling you when to buy or sell. The signals are useless because if they actually worked, the seller would just place the trades themselves. Selling signals is monetizing the appearance of insider knowledge, not the knowledge. They sell courses, mentorships, or inner circles that cost a few hundred to a few $1,000s. This is the actual product. The trading is the marketing for the course, not the other way around. They promise financial freedom in 90 days. Replace your salary by next quarter, or any specific timeline tied to enormous wealth. Real wealth building doesn't have a 90-day plan. It has a 30-year plan. They use community language, family, tribe, inner circle. We move as a team. Just like MLMs, the emotional belonging is the hook. The product is just the cover. They use leverage in their public trades, especially crypto perpetuals or Forex CFDs at 20 times or higher. They are not investing. They are gambling, and they're showing you only the wins. If 3 of those flags show up in a single video, you are watching a trading guru, not a trader. Close the tab. The honest path and Tyler's recovery. Now let's address the honest question, because the gurus, despite all of the above, are pointing at something real. Tyler is facing genuine economic pressure. Wages haven't kept pace with rent. Buying a house seems impossible. Inflation is real. The desire to escape that pressure quickly is rational. The problem isn't the desire, it's the path. Here is the honest comparison the gurus will never put next to their Lamborghini videos. Tyler's $2,400, if it had simply gone into a low-cost index fund inside a Roth IRA, exactly the strategy from our Roth IRA and index fund videos, would, at average long-term market returns, grow to roughly 5 times that amount over 20 years without him touching it. No charts, no 1 a.m. trading sessions, no leverage, no course. It's not exciting. It will not get him a Lamborghini. But it is something the day trading version literally cannot produce, because the day trading version has, by the published data, a more than 70% chance of leaving him with less than he started with. If Tyler still wants to engage with markets, there is a small, honest version of that allowed, sometimes called play money. A maximum of 5% of his total investments set aside in a separate account that he is genuinely allowed to lose. Bet on individual stocks. Try options if he wants to learn how they work. Buy speculative crypto if he wants exposure to the asset class. The other 95% sits in boring, broadly diversified index funds and never gets touched. This way, the curiosity gets honored, the downside gets capped. And if the 5% goes to zero, the other 95% is still quietly compounding toward actual wealth. This is the structure professional investors use. It's the structure the gurus never teach, because there is no Discord subscription to sell with it. Tyler's $8,000 hole takes him about 2 years to dig out of using the debt payoff method from Omar's video. He stops watching trading content. He starts watching this channel. The Lamborghini videos slowly disappear from his algorithm because he stops engaging with them. He'll never have a viral story about turning $500 into $50,000 in a weekend. He will, by 35, have a real net worth that's significantly higher than 95% of the people who watched that same Lamborghini video and never recovered. Closing Tyler isn't real. But what happened to him last year happens to enormous numbers of young men every year on platforms designed to extract money from exactly his combination of ambition, frustration, and inexperience. There is nothing wrong with wanting to escape an economic situation that feels unfair. The unfairness is real. The pressure is real. Your skepticism of slow, boring wealth building is real. What is not real is the version of escape the gurus are selling. That version mathematically cannot work for the majority of people who attempt it, which the regulators have forced the brokers themselves to admit in print on every page. The boring path, the Roth IRA, the index fund, the high-yield savings account, the 4 habits Ben used, look slow and unsexy from the outside. From the inside, it is the only path that the actual data supports for most people. The gurus look like the fast lane. They are, mathematically, the express train to less money. If you are currently in a trading course, a Discord, a Forex group, or following a guru on Instagram, this is the video where you decide whether to keep going. There is no shame in the fact that you started. The system was engineered to catch you. There is also no virtue in continuing once you've seen the math. This channel teaches you what school didn't. No gurus, no scams, no buy my course. Just the truth, animated. New video every 2 days. After 2 days, we tackle the slow, unsexy, secretly incredibly powerful skill of negotiating your salary, including the exact words to say in your next performance review why most young workers leave tens of thousands of dollars on the table at every job change, and the one specific question that has earned more raises than every productivity hack combined. Welcome to the club.